All right, guys, by popular demand, or maybe not so popular demand, I'm going to do another video. I've been talking with some guys in the Discord right now. Even just right now, I'm like, here, you know what? I'm going to go post a video right now. So I'm going to do it. I have this urge to post them every once in a while. And last time I kind of felt like I shouldn't have, or I felt bad about it after because I don't think I was ready to yet again for whatever reason. I don't know why, and I set myself to this schedule of like, oh, I'm going to post a video every single day, and then I started posting when I was doing well, and then, you know, I lost a good chunk of that account that I was up, because I showed the last video I was up like 215%. I ended up losing over half of that, and then I doubled it again in 3 days, and then I lost like a quarter of that, so I think I was just kind of going off of my emotions a little too much, but that's fine. I've done a lot of work emotionally and kind of outside of trading since that last video, and I don't know, I just got the urge to make another video, and maybe these will start to come more and maybe they won't, but I was just looking at my channel and stuff, and I was kind of like, man, I miss that. I don't want this all to go to waste. You know, I put a lot of time making videos, and I know people enjoy them. I just think I was doing them for the wrong reasons. I was trying to always post these big gains and these big numbers, and it was affecting my trading, and that's 100% my fault. I shouldn't have let that happen. I did let that happen, but I've changed a lot since that, and that was my fault. I needed to take time off, and I still might be taking time off again. I don't know when I'm going to do another video. I'm going to go over some trades that I took the past couple days, like this whole week of options. Because my strategy's different now. I don't really play with these penny stocks. I did today, and I hated how it felt on ACHV. I only took 300 shares because it whipped around so much, and I missed my first entry here that I was looking to get in. I think it was like right in here, or it might have been right in here pre-market. And there's so much lower returns. Now I could get into why I traded to change to options, but I think I've talked about that before. But just briefly, so again, this is all I traded today. You can see all I traded was ACHV. I only made $96. Where is it? Now, before it was like, oh, if I didn't have the $1,000 day, you know, I'm useless. I'm a shitty trader. I can't post to YouTube. But I knew that I was trading for the wrong reasons before. Of course, if you trade your P&L and you want to make $1 million trading, that's the fastest way to lose it or to not be a successful trader. So I've done so many things, a lot of reading. I don't even know where to start. I probably should have structured this a little better and wrote something, but I was talking to the guys in Discord, and the link for the Discord will be down below if you would like to join. It's free. I'm not trying to sell anything. I'm in there every morning talking about the stocks, but I was just talking with a few guys, and I miss like trying to help people, like just teach them how to trade maybe a little better, or just kind of show what I'm doing. And of course here again, ACHV is going crazy, but I'm not going to touch it. But yeah, the reason that I changed to options from these penny stocks is there's a lot less manipulation. So you can't have a guy with one account, you know, move Facebook or move Apple. You can't really do that simply because of the market cap. Now you can do that with these stocks. We saw on AWX, one guy bought up the entire float and pushed this thing pretty much from $3 up to 20. Now it hit 30 something pre-market. I think you'll be able to see that if I do this, the hourly. If we go back here, all the way back, yeah, it hit $35.80 or $36 pre-market. So that's insane. That's a 1,400% move. And you know, it screwed a lot of people over. It screwed a lot of shorts. It screwed a lot of longs. Like it was pretty difficult to trade, and it wasn't fluid. The point is that it wasn't fluid, and that it was very easily manipulated. I just find that the bigger board stocks like Facebook, I'm looking up at my TV here because I have like a lot of charts up here. I trade a lot of Facebook, Netflix, Tesla, Apple, and I don't trade the futures yet, like the ES, which is the S&P minis, and the NQ, which is the NASDAQ futures, I believe. But I watch them all the time, and that is my goal, to eventually include futures into my strategy. And it even just kind of sounds cool, right? Oh, I trade futures. So that's that. I already can feel this video being quite long, so I apologize for that, but I know that it'll probably bring a lot of value to people. So anyways, the first thing was manipulation. The second thing is that with the leverage of options, you can make insane returns, way better than penny stocks, using less money, and it is based on the underlying of a big board stock like Facebook that doesn't have this ridiculous manipulation where, you know, you go long on some shithole company like ACHV and then you get dumped on, or, you know, you buy for this breakout right here, boom, and then all of a sudden you get dumped on for 10 cents, or like it's just not as easily predictable. Whereas something like Facebook, which is part of my strategy, that I missed today because I traded ACHV, and that makes me pretty mad, but I'll show you what happened. So in my strategy, I use a lot of trend lines, you know, key levels. It's a very simple strategy. It's so simple. So what I saw on Facebook today was this. Let me move this over a little bit more, or we can go like this. And I'll show you like this. So this is what I saw on Facebook. We had a trend line that was being very well respected. You know, let's say even this line rates here. You can see that once it broke out of this, we came up, we came back down. We started forming this channel here. So this channel is this line right here, and it's respected by this line right here. So I had no trades. I might have traded it. We'll go over those videos in a second. But today, my play, or from last night, I saw the chart was kind of looking like this. We had this run up. We have the trend line that's respected. We have the tap here, another tap here, and a tap right here, and boom, it just shoots right up. And we still have this line here, which is the high of this this push that it made. So that's why that is a key level. Now, if you look back on the chart again, you can see that this key level also lined up with this level right here. This was back on September 11th. So September 11th, also it hit it again September 21st, which was like a week ago. So it is clear that that's a key level. So we got above that, and I was looking for Facebook to come back down. So we saw this. This is what I saw yesterday. I saw this. So as the trend line's coming up and we are breaking through this key level, that's an ascending wedge breakout. I don't want to go over all the patterns, but that's an ascending wedge breakout right there. That's what that is. So pre-market, I was watching Facebook, and I saw that we were up here around 168. Now 168 is too high for me to get in, because in reality, the support is down here around 167. Now, if you're in the options from 168 and you're wrong and you hold all the way to 167, you'd be looking at probably, I don't know if I can show you here based on this chart. It'd be similar to something like this move right here, where you'd be holding from here to here and you're down like 40%. So you can't afford to get in at the wrong time. So 2 minutes before the bell, less than 2 minutes before the bell, it dipped. It dipped down, and you can see right here on the 1 minute, right to the line that I had drawn, this 167.27 line, and I missed it because I was looking at ACHV. And then what ended up happening here, so I was going to buy the 170 Facebook calls with the expiry being, so I have the chain here, the option chain here, the expiry September 28th. So I would have clicked on, boom, 170 calls. It would have brought this chart up right here, and I would have bought them in this area, I guarantee, because that's my strategy, that's my edge. I would have taken it, and if it hadn't have worked, I would have stopped out under this low right here for a very, very tiny loss, which would have ended up being maybe 10%. So what happened with these options was they opened around 43 cents. You can see this right here, 43 cents, and they went to a high today. Actually, they went even higher than this. They went all the way up to 225. 225 from 44 cents. 400%. Now, I wouldn't have held for that whole thing. I probably wouldn't have held for more than about 80 to 100%. But even that would have been much better than ACHV. I wouldn't be so upset about missing my setup. This is my play, and I missed it. But, you know, that happens. So a realistic target, because I want to give you guys some value. For example, would have been, so the first level right here is clearly this right here. It's the next high, the next level that it gives you on the chart. So that one is very clearly laid out right here. So if you go back even further, what I also use are pivot points. So you can clearly see in this area that the stock is consolidating in this area. So the next area would be that area, somewhere around, let's just say like right around in here. So what did Facebook do today? So Facebook broke out of this wedge. So if we move this wedge up a little more, you can see that it clearly used that as support, these two lines, and it shot up, it consolidated. I would not have sold yet because I've made that mistake before where I sell too early and I don't realize the full potential of the trade. And then boom, right up to the target. And let's say I sold at 9:57 or 10 o'clock. So 9:57 or 10 o'clock. If we look down here, 9:57 or 10 o'clock is somewhere in the 95 to $1 range. And I would have gotten in somewhere around 50 cents. So let's say 55 cents even up to 95 cents. A 70% gain. Now, I would have put in around $500 to $1,000. So I would have made, you know, $400 to $800. And that happens, well, this was a really good trade. So usually I wouldn't make that much, but that is well within my strategy. And that's why I'm pissed off that I didn't take it. And instead I was looking at ACHV, where I only made less than $100 after putting in $1,200, which is even more than I would put in with the options, because I'm still getting used to it. I'm still trying to be completely consistent. So that's what would have happened there. Now I'll show you the live video of what I did. Was this today? Yeah, so let's start. What was I looking at? Let me find here. So the first day I have here, 9:25. So sure, let's start on Tuesday. I'll show you guys some examples of this. Again, sorry if this is a little longer, but I don't think there's a lot of examples of people trading options, and that's what one of my friends here, Doozy, said in the Discord, is that he wanted to see some of the examples of my strategy. So again, let's open it up and take a peek. Because I still record my screen every day. I still do that. So I saw, you can see here, clearly I like this pattern. This is the same kind of pattern on Tesla. This was September 25th. You guys can go look at this on the charts and see it for yourself too. Tesla over here, if I just pull it up. Tesla, that would have been September 25th. I have different lines, so I'll just use this video here. I was looking for the flat top breakout. As we kept obeying the support line pretty clearly, and you can see it on the daily down here that it started from much before this trend line. So I was looking for it to go above that. Where did I buy, or did I start the video after I bought it? Yeah, I must have done that. So it wasn't all the way down at the support level because I was buying at $300. Now $300 is a very massive psychological resistance and support level, as we all know. Otherwise, I would have given it more time to come down to the 296 area, but I honestly just didn't think we were going to get there. So I took the trade here and I said under the low of the day, I would have just stopped out. And I would have stopped out and I would have taken the whatever it is loss. It probably would have been about 10 to 15%. So I accidentally stopped recording, so I'm going to start recording again. I think I just said 10 to 15% would have been the loss. But what ended up happening was the trade started to work out and traders started to buy up the stock as they saw that it was holding this $300 area, and then with that the contract started moving, and they started moving fast. These are very volatile. That's why you have to have the perfect entry. Otherwise, like I said, you're down 40% on what could be support before it moves higher. So you can't afford to be taking an entry that's a chase or something. So an average entry here of 359, and we're already up at 440. Now the spreads are a lot tighter. I just don't have the data feeds. It's probably like 440 by 450 right here. I just don't have the books, like the data feeds on it. So that's why it looks kind of disgusting, but it's not usually that bad. So anyways, we get to my first target here, which I got by yesterday's high or the previous day's high. And then the next target after that was this high right here. So I wanted to see how it reacted around this level before selling out and potentially missing the move higher. But I knew that it just moved 3 points. It's just moved from 300 to 303. This is probably where a lot of people are going to start to take profit. I tried to add there, actually, you saw. And now I'm just waiting. I'm waiting to sell out, because if this doesn't hold, for example, if it doesn't hold this low that this 1 minute candle just made, and see how it's flashing red there. So we're getting fast washes, and that's an example to me that this is kind of shaky. People aren't really buying this up. It's like going from down to break even, and now we're back under this level. So I already don't like the way it's responding here. I'm getting ready to close out the position. Either if it dips right away or if it comes back up to that level and the contract, the bids here, if they move back up. So I know people are getting greedy. They're trying to jump into this. They think it's going to go higher, but I see the weakness. I'm ready to take my profit that I didn't take already. So I'm waiting for it to either crash or come back up to my target, and I'm going to sell. So we'll see what happens here. I'll fast forward it a bit. So it ends up coming through my target again. Boom. So I sold one contract here because I told myself that I was going to sell them as it came back up to this target, but I didn't. So I didn't necessarily break a rule, but I did want to lock in that one contract. So I sold a contract. I locked in $133, and then with this one I said, okay, it's either going to come down to here and I'm going to sell it, or it's going to go to the next target. It was one of the two. So if we look here, we started to see weakness, and as it was plummeting through, I sold out of the contract right here. Where did I get my last fill? I actually got a really good fill on that, so let's look at that. There, boom. I sold the contract as it was coming back down. Again, I just saw confirmation of that weakness, and I really didn't like that, so I got out of it. I sold. I got the fill at 450, and we can see here 450. Boom! The contracts are already all the way down to $4. So again, you have to be really diligent with your entries and your exits, because you make one mistake, whether it's greed, fear, and look at how fast you just lost 15% from 460 or whatever down to $4, just like that. So that was an example of a good trade that worked out. I think the next day I made money too. We can just quickly look at that. Where is it here? Okay, so Netflix. This one was a little more complicated. It's a very similar trade. There's a trend line that was coming up and another intraday trend line that was showing us that we were starting to break through all of this slanted resistance right here. We had already actually broken through that pre-market. So I was thinking it's either going to come back down to that and shoot, or we're just simply going to have the flat top breakout immediately and go straight through 373 up to 377. So those are the two levels right here on the 1 minute, and you can see pre-market, it actually already shot through. So I was willing to take this as it broke through the next level. So we'll see what happened here. I don't actually really remember what happened. We broke through it right away. I thought we would pull back. I was waiting for the pullback here, all the way down to this level, but I was like, okay, we might not go exactly to that level, because again, this isn't like an exact science. These levels are just kind of bendy, if that makes sense. So I take my contracts right here. I get 4 contracts, and my stop would be pretty much right here. Now, if that happened, this would probably go down to 220, and from a 250 entry, that's what, like 12 or 15% or something. So I would have lost that much, but I'm looking to gain 20, 30, 40, 50, 60, 70%. So the risk to reward is amazing. So boom, I was looking for the breakout of 373.59, an entry at 250. We're already up. We're already approaching $3 on this contract. And normally, you know, I would get a little antsy. I would start taking profit. And this is something that I changed massively in my trading, is that I have my edge and I follow the trade all the way through, or I get stopped out. That's it. And then over time, I will make money just based on that. So, man, I was so nervous right here. I was like, $200. I gotta lock it in. It's kind of getting sketchy here, but I said, you know what? No, it's gonna go down and stop me out, or I'm gonna see it all the way through. That's one of the two scenarios, and that's what it takes to be a consistently profitable trader that can eventually have the conviction and the confidence to take massive size. So I said to myself, usually I would sell out. I'm not going to do that. It's respecting this level.